Now, global stock markets are showing cautious strength, with major indices posting modest gains driven by tech optimism and expectations of central bank rates being kept on hold or cut. Let's find out the latest from Jameel Ahmad, who is chief analyst at online trading brokerage GTC. Jameel, thank you very much for being with us. Good to see you. What is the improving sentiment at the moment like on the stock market?
Certainly there's some stability now, considering where we were just over a month ago, where on the show things were a bit shaky in terms of market moves. I think what's happened is some of this mist is starting to clear, and we're starting to get some hopes that some of the trade aggression that was coming in with tariffs and a number of different economies were coming into the mix. Some of that is now leading to negotiations behind the scenes, and it does appear that the Trump administration are working very hard on making deals. Over the past couple of hours, it does seem that the U.S. and the U.K. have signed the first trade deal, which has provided more momentum that the Trump team is really making deals rather than starting a lot of trade tariffs for a prolonged period. That's helping financial market sentiment. And also, at the moment, there's been some sharp economic downgrades globally, but economic data is not quite showing that yet. So maybe some of those fears have been priced in, but the reality is that hopefully we'll get it in some light after a very uncertain tunnel.
Let's talk about the safe haven gold. Gold prices touched $3,500 at the end of last month. What are the future expectations for gold?
It was an incredible rally for gold, and in fact it was just over a month ago it was at 3,000. So it's jumped more than 20% in 2025 after an incredible 2024. I look at it now as a little bit overbought, considering that we have some of these global markets now finding stability. We have some improving signals that we're going to have deals signed for trade negotiations. So I think that investors might look to take profit. Already since this U.S. and U.K. trade deal started making the headlines, gold prices dipped as much as $90 over the past one trading day or so. I do think it can come closer towards 3,000 rather than above 3,500. However, we never say never, and this world is still somewhat uncertain on a number of different elements.
Well, talking about that then, what about people watching this, looking at their portfolio? Are they thinking they should be a little bit more diversified in their what they're doing?
You certainly need to spread your risk and not carry all of your eggs in one basket, because you look at global markets, they were fragile, gold prices have shot up, you've had a lot of volatility in foreign exchange. So there's opportunities here to diversify risk. Again, we might be getting towards the end of this tunnel, which means that some of that fragile volatility might now reverse, lead to positive momentum. So there are opportunities there. But of course, always diversify your risk. I would not just look at gold, I'd look at global markets. The US dollar looks very oversold. Oil has also been oversold, to be honest. So I think there's a lot of opportunities there.
Quite a lot of uncertainty around, as you say. So should investors sell or hold their positions currently?
I would say hold. I think that we've come towards the end now of what was an uncertain period, and that was the most significant moves in volatility that we've seen since the beginning of the pandemic. So I think that now we're starting to look a bit more stable. Of course, you have to watch the headlines. Investor education is very important, so don't take your eyes completely off the ball. But it's certainly looking a lot more comfortable now than a few weeks ago.
All right, we'll leave it there. Run out of time. But Jameel Ahmad, always a pleasure having you on the programme. Thank you very much.